Return on equity is a similar calculation. Net profit is divided by equity. In the case of net return, both net profit and revenue cover the same period. However, in the case of return on equity, the period's net profits are divided by the ending balance for the year or quarter. In the first instance, both values come from the income statement. In the second, the income statement value representing a period's activity is divided by a balance sheet value representing the net worth at the end of the period. And here is the formula. And let's see an example. Your company reported net profit this year of $528,000. The equity as of the end of the year was $5,326,000. What is the return on equity? Let's see it on a spreadsheet. In the spreadsheet, enter the value of net profit and equity, and the calculation is very simple. Divide the net profit by the equity and you will receive return on equity in percentage. Return on equity shows how effectively your company has been able to put its resources to work in generating profits. This formula is not entirely accurate if the value of equity has changed during the year. For example, if additional stock has been created and sold, both beginning and ending balances of net equity are not representative of the entire year. The net income is income for the whole year, but if equity changes, then its value has to be based on the average for the full year. The formula for return on equity is adjusted in one specific circumstance: when a corporation has issued a redeemable preferred stock, a special class of equity that acts more like a bond than like equity. The formula should exclude its value. This formula produces the net return on equity. Here is the formula: net profit divided by the equity minus redeemable preferred stock. And here is an example. Your company reported net profit this year of $528,000. The average equity value for the year was $5,326,000. However, equity included $300,000 in redeemable preferred stock. What is the net return on equity? And here is on the spreadsheet. Okay, let's enter the net profit, equity, and the value of redeemable preferred stock. And here is the formula, and it is the net profit divided by the equity minus preferred stock, and you will receive the net return on equity in percentages. Although the formulas for return on revenue and return on equity are simple, finding the right values is not always as easy. Ensuring the consistency of the values used is a basic requirement for high-quality analysis of financial results.